Hello and welcome to Miles Education. I'm your instructor Varun Jain, and today we're going to start with the financial accounting and reporting section of the CPA exam. Now, if you realize financial accounting and reporting has got two pieces, right? You got financial accounting where you're putting together the journal entries. Remember the ledger T accounts, the trial balance, and then finally it's financial reporting, where you prepare a full set of financial statements, which includes number one, the balance sheet, number two, the income statement, number three, and we're going to talk about that, the statement of comprehensive income, number four, you got the statement of stockholders' equity, and the number five, we're going to look at the statement of cash flows. So that's a full set of financial statements part of your financial reporting. Now the question is, why is financial reporting so important? Why do companies, accountants put so much of time, so much of effort in putting these financial statements together? Now guys, these financials, they are prepared to serve the informational needs of the users of the financials. Now, who are these users? They include the investors, the shareholders of the company. They include lenders, they include creditors. Now, all these users, they want to know what's happening with the company. Now, when these users look at the balance sheet, they get to know about the financial position of the company. When the users look at the income statement or the statement of cash flows, they get to know about the financial performance of the company. Basically, when the users look at the financials, they get to know about management performance. So if the numbers are good here, they're going to give a thumbs up to management, good job. But if it's bad numbers, the users, they're going to give a thumbs down, bad job by management. Now, if you realize the users of the financials, let's say, not only include the current investors in the company, but may also include future prospective investors of the company. Let's talk about your example, and let's talk about this company, Walmart. Let's say you don't own any shares in Walmart. You're not a shareholder or an investor yet. But let's say you intend to buy shares of Walmart. You intend to invest in Walmart. Now, before you invest, wouldn't you want to look at Walmart's financial statements? Wouldn't you want to look at Walmart's balance sheet or Walmart's income statement to see how the company is doing? Right? So guys, these financial statements serve a very, very critical informational need of all these users, the current investors, current lenders, current creditors, even future potential investors, lenders or creditors. Now, before we get started on FAR, right? I think financial accounting and reporting, it sounds far, right? It sounds like too far, a lot of content. And that was basically how financial accounting and reporting was structured earlier, right? A lot of content. Now with the CPA Evolution 2024, there's good news for you. The AICPA has restructured the content for financial accounting and reporting. And trust me, it's now not too far. A lot of the advanced accounting portions, right? We call this technical accounting and reporting portions, like lessor accounting, like pension accounting, foreign currency, or even governmental accounting. A lot of these portions have now been moved out of FAR into BAR, which is one of the electives, right? So BAR is business analysis and reporting. So what now happens is FAR is leaner and of course easier to pass on the CPA exam. So guys, are you ready? We are living in a bilingual accounting world. So in the US, if you're trying to prepare these financial statements, you're going to be doing it as per US GAAP, US generally accepted accounting principles. Internationally, you see a lot of countries using IFRS. Now on the CPA exam, our focus is on US GAAP. Now, traditionally, the authority to establish US GAAP rests with the SEC, the Securities and Exchange Commission in the US, which is basically the regulator for the US capital markets. However, SEC has always delegated this responsibility to the accounting profession. So you now have FASB, which is the Financial Accounting Standards Board, which is responsible for issuing US GAAP. Now, many years back, in 2009, FASB reorganized thousands of US GAAP pronouncements and they created the ASC, the Accounting Standards Codification.
On page 3, we're looking at standard setting bodies and hierarchy of US GAAP. Highlight SEC, or the Securities and Exchange Commission. Although the authority to establish US GAAP rests with the SEC has historically delegated its responsibility to the accounting profession. Now, the SEC was established in 1934 by the Securities Exchange Act. Highlight SEC rules and regulations apply to all companies that issue securities in the US. That's issuers. Basically, we're talking about public companies. Now, on the last sub-bullet there, highlight FASB, or the Financial Accounting Standards Board. This is an independent, full-time organization established in 1973 and has determined US GAAP since then. Highlight through 2009, FASB issued the Statements of Financial Accounting Standards. And then highlight, in 2009, FASB reorganized all US GAAP pronouncements to create the ASC, or the Accounting Standards Codification. On page 4, highlight Accounting Standards Codification, or the ASC. Now this is highlight single source of authoritative non-governmental US GAAP. Now the ASC reorganized thousands of US GAAP pronouncements into approximately 90 topics, creating only 2 levels of GAAP hierarchy. So you have authoritative GAAP and then you have non-authoritative GAAP. Now for authoritative GAAP, circle FASB and underline Statements of Financial Accounting Standards. Alongside the FASB's Statements of Financial Accounting Standards, you have opinions, you have accounting research bulletins, you have other authoritative GAAP literature like EITF abstracts, AICPA statements of position, auditing and accounting guides, practice bulletins. All of that is highlighted. All authoritative GAAP pronouncements are reorganized into the ASC. And then you have non-authoritative GAAP, which are basically not included in the ASC. So non-authoritative GAAP primarily includes highlight the Statement of Financial Accounting Concepts, SFAC, which is the FASB theoretical framework. These are like underlined rules for the rule makers. And highlight this is non-authoritative GAAP excluded from the ASC. Now, in the Accounting Standards Codification, you also have certain SEC pronouncements. Now, highlight include only relevant portions of SEC pronouncements in the ASC. Now, as you know, SEC, the Securities and Exchange Commission, regulates all public companies, regulate all companies which are issuers, which issue securities to the public. And these pronouncements primarily relate to those public companies. On page 5, you've got the ASC categories with topic numbers. So you have the category on general principles, category on presentation, assets, liabilities, equity. Now, put a bracket around these 3, assets, liabilities, and equity, write the balance sheet or B/S. Then you have ASC categories around revenues and expenses. Put a bracket there, right? Income statement or I/S. And then you have ASC categories around broad transactions and industry. We'll look at all of this in just a moment. But let's talk about US GAAP and IFRS. So highlight International Accounting Standards Board or IASB issues highlight IFRS or International Financial Reporting Standards. So right there, FASB equals US GAAP, IASB equals IFRS. Now, as we discussed, we're living in a bilingual accounting world where the US follows US GAAP and internationally you see IFRS being followed across many countries in the world. Now, way back in the year 2002, both FASB and IASB they met and they wanted to converge US GAAP and IFRS to create one set of globally accepted accounting standards. Now, they launched out a lot of convergence projects. Some of them were successful, some of them were not successful. So much so that in 2015, we heard from the SEC that convergence with IFRS looks difficult. And since then, FASB and IASB are still working together. And the agenda for FASB is to have US GAAP as consistent with IFRS as possible. So convergence is no longer the goal, the agenda. The agenda is try to bring these standards as close to each other as possible, which means we're going to be remaining in this bilingual accounting world. Now, from a CPA exam standpoint, the CPA exam now only tests US GAAP. So yes, IFRS is no longer tested on the CPA exam. So we're going to focus on US GAAP, but of course, a lot of the US GAAP rules are pretty consistent, pretty close to what you have under IFRS. On page 6, you've got accounting standards codification, and you've got all the categories and topics within the ASC listed in this page and the subsequent pages. Now, for starters, right, do not memorize the topic numbers. So you're going to be familiar with how this works. You're going to have accounting standards codifications being asked on research simulations, but at that point, you'll actually have access to the entire authoritative literature. So you don't really need to memorize these topic numbers. But as you go through these, we'd see you've got general principles. So you've got topic code 105, which is around gap hierarchy or gap history. And then you've got presentation, which is topic codes 205 to 299, which starts with presentation of financial statements, balance sheet, statement of stockholders' equity, comprehensive income, income statement. 230 is statement of cash flows. 235 is notes to the financials. 250 is accounting changes and error corrections. 255 is changing prices. 260 is earnings per share. You've got interim reporting at 270. And then, it sort of goes all the way to 280, which is segment reporting. On page 7, you've got assets, and within assets, you've got topics 305 to 399. 305 is cash, 310 receivables, 320, 321, 323, 325, all of those are investments. 330 is inventory. 340 is deferred costs. 350 is intangibles. 360 is PP&E or property, plant, and equipment. The next category is liabilities, which is topics 405 to 499. And then you've got the category on equity, which is topics 505 to 599. On page 8, you've got the category on revenue, which is topics 605 to 699. And then you've got the category on expenses, which are topics 705 to 799. Again, you don't need to remember any of these topic numbers. On page 9, you've got the category on broad transactions. So topic 805 is business combinations. Topic 810 is consolidation. 815 is derivatives and hedging. 820 is around fair value measurements. 825 is financial instruments. 830 is foreign currency matters. 835 is interest. 840 is leases. 845 non-monetary transactions. 850 is related party disclosures. And then you have 855 subsequent events. 860 is transfers and servicing. Again, these are broad transactions that are covered within the accounting standards codification. And finally, on page 10, you've got the category around industry. Now here you have US GAAP as applicable to various industries. So look at topic 905, that's agriculture. And then you have 908 airlines. You've got contractors, you've got entertainment, extractive activities, financial services, franchisors, healthcare entities, not-for-profit entities, plan accounting, real estate, regulated operations, software, US steamship entities. So here you have US GAAP as applicable specifically to each of these industries. On page 11, we're looking at the accounting cycle and preparation of financial statements. So guys, the name of a subject here is right FAR, or financial accounting plus reporting. So when we're looking at the accounting cycle, we're going to start with financial accounting. And you start with recording, highlight journal entries. I'm sure all of you remember underlying the 3 golden rules of accounting. Now, once you're done with the journal entries, you post transactions to highlight the general ledger. And then you prepare, highlight the trial balance. So it's an unadjusted trial balance. You do all the adjustments, you get to the adjusted trial balance. So guys, this is all about financial accounting. On page 12, financial reporting. So financial reporting is where you prepare the financial statements, including highlight the balance sheet, highlight the statement of earnings, which is the income statement, highlight the statement of comprehensive income, statement of stockholders' equity, highlight the statement of cash flows. All of these 5 statements are highlight a full set of financial statements. And then over and above these 5 statements, you've got highlight notes to the financial statements and any required supplementary information. Now, this constitutes highlight general purpose financial reporting. On page 13, we're looking at the primary objectives of general purpose financial reporting. Now, the focus, is on the informational needs of external users. So financial reporting is done to focus on the informational needs of external users. Now, who are those highlight users? They include highlight existing and potential investors, lenders, and creditors. So you're not just talking about, let's say, existing investors. You're also talking about potential investors who may look at those financial statements to decide whether or not they want to invest in the organization. Now, when the users, they look at those financial statements, they look at the financial reporting, they get direct as well as indirect information. Highlight direct information. is about the entity's underlying financial position. Now, financial position that comes in from balance sheet or B/S. Again, when the users look at the financial statements, they also get to know about the entity's underlying financial performance, which typically they get to know from the income statement, I/S. And the users also get to know about the entity's underlying cash flows, C/F. That's typically from the statement of cash flows. Now, besides all of this direct information, when the users they look at the financial statements, they also get highlight indirect information, and this is about put a box around management performance. So when the users see good numbers on the financials, they give a thumbs up that management has done a good job. But if the users see bad numbers, they sense trouble when they look at the financial statements. They actually say that management has done a bad job with their performance. On page 14, highlight general purpose financial reporting. And as we've seen, this is highlight full set of financial statements plus notes to the financials plus any required supplementary information. Now, we know that highlight the full set of financial statements includes highlight balance sheet, statement of earnings or income statement of comprehensive income, statement of stockholders' equity, and the statement of cash flows. On page 15, highlight notes to the financial statements. Highlight to help achieve the objectives of financial reporting, the notes should contain information about the following matters. Highlight financial statement line items, the reporting entity, past events and current conditions or circumstances that have not been recognized that can affect an entity's cash flows. So guys, the primary purpose of these notes are to supplement or further explain the information which is there in the financial statements.